All right, well, it's 11. I think we'll have some people still joining us within the next few minutes, but we'll go ahead and get started. Just wanted to welcome everybody to our kind of mini B-Learning event series brought to you by B Local PDX. I'm Rose Lavelle. I serve as the Learning Chair on the board. I help plan and host these events, and I'm the person you'll want to talk to if you or someone you know wants to present on a topic. We're going to be bringing a lot more digital topics to you in the next few weeks. So just connect with me. I can put my email in the chat or email info@blocalpdx.com if you have any great ideas for presentations. I just want to start by giving a huge thank you to Craig Hill. Craig is our certification chair on the board. Craig also works at Beneficial State Bank and will be giving us insight today into some new loan options for small businesses and organizations. We'll start off with about 15-20 minutes overview of program eligibility, and then we'll open it up for questions. We plan on about 30 minutes total, though we can keep it open a little longer if there's questions and if Craig is available. For a few housekeeping items, just remember to mute your microphone if you're not speaking. You can unmute if you have a question. Feel free to use the chat option too. I'll be kind of managing the chat, and if you have any issues or questions, I'll try to call out those questions, or we can save them towards the end. We'll make these resources, we have some slides here, available tomorrow, as well as the recording. So if anyone missed it, you want to send it to them. We also hope to answer really general questions, but if you have more specific things, it's going to be best to contact your banker, and Craig will get into that a little more. So yeah, thanks for coming, and I think that's everything. So yeah, Craig, take it away.
And Rose, if you wouldn't mind, if you have the event link, we could send. Apparently some folks are having a hard time finding the Zoom room.
Sure.
Not everybody, but some. There we go. Seems like folks are popping in here too. Well, welcome everybody. I'll share my screen here in just a second. I'm capable of going over a little bit here today too, so want to make sure people get their questions answered and kind of start with a general preface of, yeah, I'm Craig Hill. I work at Beneficial State Bank. We're a fellow B Corp. And we, like all other banks, are absolutely inundated with interest in these programs. And the SBA has not released bank guidance on how to process the loans yet for the payroll or the Paycheck Protection Program. So we'll talk about it today. We'll do a lot of different pieces. We're hoping for that information really any minute now as a bank, because the application window, the SBA keeps saying it opens tomorrow. So it'd be really nice to know what people are applying for before people start really getting going. So yeah, I'm excited to get this together. I'm going to share my screen here and we can get going. This is going to be recorded. Please do use the chat function. You know, I'd love to answer some questions at the end as well, because your question might be answered during the course of the presentation. So perfect. Can everybody see everything? I can't see you, so a verbal yes is great. Oops. Oh, it was there. There we go. Cool. So as you have probably heard, the federal government has passed some relief over the past week, specifically dedicated towards serving small businesses, including nonprofits. I'm here today to talk a little bit about what we know, what we don't, and where to get started. So first things first, let's have a couple definitions. I work at a bank, so these things, you know, some of them are really familiar to me, but they may not be familiar to you. And then other ones are just really new. So the first thing that you're going to hear a lot about over the next coming weeks is the CARES Act, if you haven't heard in general. And the CARES Act is the Coronavirus Aid, Relief, and Economic Security Act. It's an 880-page bill that was signed into law this past week on Friday evening, really at 8 p.m. Eastern time, actually, and was first released for public review at 8 p.m. on Wednesday, the 25th. So that's a week ago yesterday. It's a very, very broad stimulus bill, the largest package ever passed by the federal government, totaling about $2.2 trillion in aid and support. And critically, for what we're talking about today, it includes a $349 billion loan pool for small businesses administered through the SBA. What is the SBA? It's the Small Business Administration. It's part of the federal government. What it was specifically designed to support small businesses and entrepreneurs. Often they have the hardest time finding capital. And so what they do is they back loans by a partial government guarantee. Traditionally, the 7A program, which is part of this, the Paycheck Protection Program, was guarantees of up to 75%, maybe 85% under given circumstances. And their 504 program was up to 90%. But they had to demonstrate, borrowers did, that they wouldn't be able to obtain loans from banks and other SBA lenders without these guarantees. So really it was a modification, a support for folks so that they can get the loans that they would otherwise not be able to obtain to keep their business growing. And the US government recognizes the importance of having that support. So they have two different loan pools that are out here right now. There's the EIDL, the EIDL program, and the Paycheck Protection Program. The first one, economic injury disaster loans, are the EIDL program, and the other is the Paycheck Protection Program, or PPP. So you'll see EIDL or EIDL and PPP regularly over the next few weeks, and here's why. They both involve the SBA in some fashion, but they really do differ significantly. So while you're going to hear them, they are not the same thing, and they're important to keep straight. Both can be obtained by businesses, meaning one does not preclude the other. However, there's some big caveats in there that we're going to touch on later. And both offer loans that could be forgiven either partially or entirely under certain circumstances. And when we say businesses, we also mean nonprofits. So it tends to mean 501c3s, though. We're hoping for some more guidance on that. But C4s and C6s may not qualify. So check with your banker on that as the more information becomes available. So first things first about let's talk about the economic injury disaster loans. Businesses apply directly through the SBA. This is not a bank program. This is an SBA program, and it is for working capital. You must be in an area deemed by the SBA to be experiencing an economic disaster. Well, the entirety of the United States and all territories are currently qualified as disaster areas. So, but just traditionally, the EIDL program has been in place before this crisis. So they've now declared the entire United States as a disaster area, so that's already been checked. These loans are for up to $2 million, and they are for working capital, and they could be used on a broad range of issues related to your business that you may be experiencing due to coronavirus slowdowns. That means that they're relatively unstructured, but they critically, they are loans. They are expected to be repaid. The repayment rates are 3.75% for businesses and 2.75% for nonprofits.
Hey, Craig. Hey, Craig, I think we lost you on the audio.
It looks like he lost both audio.
Yeah.
All loans that you apply for will be approved.
There
Yeah.
it is.
Is there a question?
We lost you on audio for the last about 20 seconds.
Oh no, I could go back to this. Sorry about that. Repayment terms, I think that's about right. The repayment rates of 3.75% for businesses and 2.75% for nonprofits. The terms are determined by the SBA, which means that you have to, your payment term will be decided when it's being underwritten by the SBA. It could be 2 or 3 years, it could be 5 or 6 years on the term to repay. And not all loans will be approved. This isn't a guaranteed program that you'll get the guarantee. It's all subject to SBA underwriting. However, $10,000 of advances can be applied for every business, and you'll get it within 3 business days of that application, regardless of whether or not your application is approved. If the loan application isn't approved, the advance does not have to be repaid. So basically, this is one of those pools of money where it's like, hey, apply for it. You might get it, you might not. If you do get it, you're going to have to repay it less this $10,000. So, but if you don't get it, you don't have to repay it, that 10 grand that they give you as an advance. So this is a pretty popular program. You apply directly through the SBA. What business doesn't want up to $10,000 of support right now, because most of them are experiencing losses that are in excess of that. On to the Paycheck Protection Program. The loans are actually bank originated, not SBA originated. So that way it is different than the EIDL program. Banks and non-bank lenders that are SBA lenders, and there are public lists that are out there on the internet. Please look them up. Some of them aren't banks though, so be cautious as you think about that with an SBA lender. Just, are they a CDFI? There's other good terms to look for if they're an SBA lender that isn't a bank, but they will actually originate and underwrite the loans. So unlike the SBA piece, it's actually going directly through banks. So these loans are based off your payroll costs. And there's a form I'll make sure that you all have in the attachments to this that help folks calculate payroll costs. There's a really good resource through the U.S. Chamber of Commerce to help folks calculate these numbers and what qualifies. But in short, it's 2.5 times your average monthly payroll cost. And those dollar amounts are to be supported by documentation within the company. Now, what we don't know at a bank right now is whether or not that's going to be required to be fully documented during the application process, or if it's actually going to be when the next piece comes for over the next few weeks, if you're going to need to have it for documentation for forgiveness. But more to come on that. The proceeds must be used, unlike with the idle loans that could be used for working capital. These loan proceeds must be used to retain payroll and staff over the next 8 weeks. The loans are 100% guaranteed by the SBA, which means no personal guarantees of any owners are required. And lastly, for this side, the loan terms are the same for everyone. Unlike with the different rates under the EIDL program, the loan terms of the Paycheck Protection Program are 0.5% and no loan fees whatsoever paid by the borrower. So that's important to remember because the program applications open tomorrow. And it's actually, well, for businesses and for nonprofits. It'll actually be next week for self-employed and independent contractors who qualify. And that program will be open until June 30th or until the $349 billion pool runs out, whichever is sooner. And I can tell you right now, it's going to be whichever is sooner, being the $349 billion. But the biggest piece of this program that has so many businesses and nonprofits interested is that they're 100% forgivable, provided you follow the eligibility conditions. How to qualify for those? That's the next piece. You can apply for total forgiveness after June 30th, provided all of these following conditions are met. One, you have to use them to cover payroll costs, at least mainly. So that's a little squishy, and the SBA hasn't defined exactly what that is, but they've also given this, they don't expect that anybody who exceeds 25% of said loan on mortgage interest, rent, or utility costs, they could risk losing the forgiveness for what they spent over that percentage. So just be cognizant, this is really meant to protect paychecks and payrolls and keep people from going on unemployment. And if you don't use it for that, it's likely not going to be forgiven. The other critical piece is employee compensation levels must be maintained, meaning that they have to look the same prior to the months prior to this outbreak. So you could think of January 1 to February 15th, you need to keep that same payment level for most everyone within a company. If you do any of those, the following things, you may risk your forgiveness, and the reduced amount will be determined by the SBA after the 6/30 application deadline. If you don't maintain your staff and payroll from that date forward to 6/30, or if you decrease salaries and wages by more than 25% for any employee making less than $100,000 a year, you can the employee salaries over $100,000 a year could be adjusted, and the program specifically allows under the payroll costs, you can't include anybody making over $100,000 a year at a number higher than $100,000 a year. So if somebody's making $200,000 a year, you could reduce their salary to any number that's above $100,000 a year, and you wouldn't be affected by this at all, is our understanding. Lastly, if you do not rehire all full-time employees laid off due to the COVID-19 complications by June 30th, you risk losing forgiveness of this loan. It's not saying it's guaranteed, but that's what they're saying. There's a risk of that layoff, of that forgiveness not occurring. So I kind of tried to color code these so we can keep them separate, but to compare the two, EIDLs versus PPP, EIDLs are through the SBA, whereas PPP is through banks and SBA lenders. EIDL loans are for unstructured working capital up to $2 million and must be repaid, although there may be some further provisions out there. The understanding is that it is a loan and you're going to need to repay it. PPP loans could be up to $10 million, but they're limited to 2.5 times the average monthly payroll. And they can be fully forgiven provided you rehire or maintain staffing, versus the economic injury disaster loans. You could apply for them right now from the SBA, and the rate and term will be determined after underwriting. Again, the economic injury loans do come with a $10,000 advance for all businesses that apply. That does not need to be repaid. And if some piece of the Paycheck Protection Program is not forgiven, it's going to be 0.5% APY payable within 2 years of the loan date, and there will be no payments during the first 6 months. So the last piece of the Paycheck Protection Program to talk about is you can apparently start applying starting tomorrow through banks, and decisions are expected very quickly, meaning if this opens tomorrow and the portal's open, you're going to know the next day, and the bank can start dispersing funds within the days to follow. Can you get both? Yes, you can get both loans, but remember, you have to use them on separate costs. So if you get an economic injury loan for working capital, while the Paycheck Protection Program loan is used for payroll costs, and those don't overlap, you can have both. Or you could use the EIDL funds after the PPP funds run out to cover payroll, but you can't be doing it at the same time. So it may behoove you to actually keep a spreadsheet or separate two separate accounts that you keep the money through so you understand what's being used when. And you're going to have to demonstrate that at some point, most likely for the forgiveness portion of the PPP, that you actually spent the money you received of that loan for the designated causes to qualify for forgiveness. So probably a good idea to start documenting that the minute you qualify for these loans, that what you're spending it on. And my last tips I'll share before we talk about questions and things, read about it. You've now had a primary, you're going to have this spreadsheet or this slide deck. Read more and you can interpret what you're hearing, because this is information is literally changing. I'm sure I've got emails since we've started this call about more developments in the PPP program. Calculate your payroll costs. If you haven't done so already, like I said, the U.S. Chamber of Commerce has a very good infographic on how to calculate your eligible PPP money. That's, again, 2.5 times your average monthly payroll cost is going to be your maximum allowed loan amount. Talk to your bank and your banker as soon as possible. And I'm not kidding, like now. If you haven't reached out to your bank about this, you need to do so as soon as possible. Banks are scrambling to figure out ways that we can serve everybody equitably. And especially a focus at our bank right now is how do we serve all of our mission-aligned communities and customers as equitably as possible. But we need to know that you're interested in it. And the assumption is that basically everyone is. If you don't have a banker, ask yourself why you don't have a banker. Explore getting one sometime. I'm a big, passionate believer in this idea that you need to have a banker, not just a bank. And if this isolation period over the next few months where business is a little bit slow, maybe explore finding a bank that aligns with your values. Stay positive. Adversity does reveal character. I really believe this, and we're gonna get through this one way or another, as long as we take appropriate actions to protect ourselves and our communities. And that's the last point I'll say, is to lean into your community for support. We B Corps are here to support each other. The B economy is resilient. We're built for a shared and durable prosperity for all, and they're essentials. We can't just talk about these things when times are tough. We need to focus on, or talk about them when things are going well. We have to consider them essential when times are tough. I really believe in that. This community is here to support you, and we're going to provide whatever resources we can at B Local to continue to keep you informed and connected during these times. So I'm going to stop my share now and pop back to the meeting here.
Yeah, Greg, we have a few questions to get started. If the first one was from Janet, and Janet, feel free to chime in here if you want to elaborate. But the SBA page only lists 3 local agencies as SBA lenders at this time. Are there other lenders being certified at this time to administer PPP?
Yes, the SBA is apparently figuring out how to get non-SBA lenders qualified. If you go to sba.gov and look at their COVID-19 resources page, they will detail more information on the farm credits, credit unions, other folks are going to be eligible to distribute these loans. We just don't know how soon. Given that the loan pool opens up tomorrow for banks, and we haven't been told yet, I'm assuming they're kind of in a similar boat. But there's a lot of options that are out there that are both bank and non-bank lenders that are SBA qualified. And a lot of them may not be considered local, but they are regional, and you could look at them on that list. The SBA preferred list is also different than SBA eligible. So the preferred list is going to be thinner than the SBA, than banks that are qualified to do SBA loans.
Okay, so if you look at the SBA lender page and you type in Oregon, only 3 lenders come up, and I have that screenshot in the sidebar. It's Mercy Corps, Micro Enterprise Services of Oregon, and OWAMI.
Those are non-bank lenders for SBA folks. Okay. CDFI non-bank lenders. The SBA preferred lender list is much, much, much larger.
Where do I find that? I couldn't find that. When I looked for the SBA lender list, that's what came up. Do you have a link that you can share with us so we can find that list? That would be really
I'm
helpful.
gonna have to navigate away from.
Oh yeah, we can maybe we can share it with the recap and post this meeting. Just if you don't have it in front of you, Craig, that way we can see. We can
Yeah,
share
I can try
more
to figure out
resources.
here how to make sure that we get that one included.
Cool.
For this.
Another question. It seems like a lot of similar.
I'll share the link in the chat here, gang.
It seems like a lot of similar questions. You mentioned if companies need to hire back their full staff by June 30th to be eligible or to have those forgiveness. I think a lot of our questions similar are, when is it by staff by hours or payroll costs or position? Just like, do you know any more info about that, or where we could kind of look that up?
I really encourage everybody to look at the SBA.gov coronavirus thing so you can see just how little guidance the federal government has given right now. It's basically like 4 or 5 sentences worth of, it's so minimal. Our understanding, and again, everything I say today is an understanding of what we have so far, and it's subject to change. Did everybody freeze? Looks like people froze.
Oh, we're here.
There we go. I froze. Just my screens did. So I remember that this is all subject to change. I wish I had more information to say on this side, but the understanding is trying to keep people from entering unemployment is the point of this program, where the government would have to pay for unemployment benefits. And if instead they can give the grants to companies to keep people from becoming unemployed, that's kind of how they're moving this money around as a pool to make sure that they can support the businesses instead of putting people on unemployment. Or if you hire somebody back. Now, the understanding is that you might have to reduce salaries for everybody to make sure that happens, but the idea is trying to not do it by more than 25% for anybody making less than $100,000 a year. We don't know about work share hours. We don't know about other pieces. But again, if you get the PPP loan and you use it on your business employees and you use it on the folks that you pay as payroll costs, as long as you're using it for those eligible costs over those 8 weeks and you don't lay a bunch of people off during that time frame, the understanding is that by 6/30, if you used all the money and it ran out and you're still struggling, that you have to document that you use those expenses correctly and you use them on the prescribed features. And I wish I had more information on that one. It's something that we're all trying to learn more about at the bank levels about what it's going to be. What I really anticipate is that it's going to be extremely light. It's all considered good faith, which I mean, good faith when you get money is like laughable. I mean, it's something where you say good faith is really, yeah, I had $1 million in payroll last month. So when you get a good faith estimate, it's probably going to be on the back end is the problem. When you actually have to get this removed and waived is going to be the bigger challenge. You're going to have to document all these expenses at that time.
Okay. So still kind of up in the air. There's not a lot of details about getting like specific individuals' costs, or there's a couple more questions about, people being on, let's see, people being out for birth of a child, but those things we don't know yet. That's correct? Let's see.
Protected leave, it shouldn't be an issue. It's just related to payroll costs of folks who would have otherwise been on payroll.
Sure. Another question from Sharon, would real estate brokers be considered sole proprietors or independent contractors or self-employed? Is there a way to find that?
I'm a real estate agent, and it varies within her own team that she works on. If somebody's employed by the team, if they're an S corp, if they're a sole prop, it really does depend on what your personal situation is. And again, the sole proprietors and contractors are going to be eligible for this starting April 10th. So we have another week that we're expecting for guidance from the SBA before banks can accept loans for those folks. But it does include everyone from like Lyft and Uber, gig economy drivers down the line.
Okay. Another question from Kel. For EIDL, do you have to prove direct loss of income, or could a potential loss of future sales qualify? Can you? Yeah. Oh yeah.
Through the SBA, and their guidelines are a little bit more detailed because they are currently accepting loans. They've also hired 7,000 people for their call center right now to start handling these things. So if you have questions regarding the EIDLs, go and apply through the SBA and talk to somebody on their line. Their call lines, apparently it's down to less than an hour for waits, which really is pretty remarkable when you consider how many hundreds of thousands of people are trying to call them at this given time. And just encourage you to reach out through that direction for specifics for your own company.
Okay. Can you use PPP to pay contractors, or do they have to be employees?
The understanding is yes, that is still payroll cost. You're still paying those people to do work for your company. And the understanding is that would be a paycheck cost. That's our understanding on this side. And if it changes later, then it's the guidance. But if you look at if you go to just Google, I could try to find the link in the chat or to put it in the chat, just U.S. Chamber of Commerce payroll cost. They have a really tremendous infographic that's well done and like organized in a way that says what qualifies as payroll cost. And it does include everything related to like sick time that you're paying for folks, matches for 401k, pieces that companies do. Like those are all related to the costs for the company that aren't directly just what we pay people to keep people employed. It's everything related to their compensation packages for being employed. So it should increase your loan amount then by including those things, which should be beneficial for your usage during those next 8 weeks.
Great, that answered another question about matching and health and dental. And so it seems like that's all going to be included in those calculations.
Correct.
Okay. I think that I might have missed something in the chat. So now would be a great time if anyone has questions that they put in the chat that I missed, or additional questions for Craig.
Yeah. It's still just, there's so much of this, unfortunately, that that we're going to just have to determine it. And I wish I had more guidance for a lot of things. I mean, obviously for this community, I wish it for myself, because we get a lot of questions right now. But realistically, the biggest things to take away from this side is that there are two different loan pools, and you should be able to get familiar with the nomenclature of the two of those to keep them straight. You can apply for the economic injury disaster loans right now. Like you could literally open up a browser window and start doing it today. And then demonstrating those losses for that side is going to be underwritten by the SBA. You actually
do have to say, I feel like we are very educated on all this, Ben.
What's
yeah.
that?
It's funny how many of these people know nothing.
Yeah, it's Rose, you're muted there. Yeah, but it's just tough. It's so hard to know what these are. And like, again, the infographic through the U.S. Chamber of Commerce is really great for helping with your payroll costs for the PPP part. The parts about the SBA EIDL loans are going to be complicated for folks who don't have a background in financial information, and banks aren't the ones who are administering them. But remember, if you can demonstrate an effect on your business that's happening, there's going to be time for you to work through this. And I've talked to a customer yesterday who was having a problem. They said that they called the SBA and they actually talked to somebody in their call center for like 45 minutes and walked them through every question that they had, and were really impressed by just how much help that they were getting from the SBA, considering the hundreds of thousands of calls they're getting every day. It may take you a long time. We had a joke with somebody a week ago that they called the EIDL line, and after an hour and a half, they went from like 791st in the queue to 698th in the queue. So it's getting better than that is our understanding. And reach out for help on that side. You have your finance team pull things together. If you have one, pull your QuickBooks statement, see what's at, look what you did last year in March and look what you did this year in March. And it's a pretty simple way to start looking at what might have affected you related to this versus your projections.
We've got a couple other questions on the chat, but if anyone wants to chime in too. From Jeff, for clarity, if you rehire to levels below the 25% of normal threshold and do this prior to June 30th, you are not ineligible for forgiveness, but the amount forgiven will be reduced by some proportionate yet to be determined amount. Is that right?
Yes.
Okay.
That as long as you're using the costs on payroll costs, you're using the loan for payroll costs, and you're trying to do everything you can to keep people employed and keep things going, the understanding is not that it wouldn't be all of a sudden you have to repay the entire thing, is that they're going to look at this as a proportion. It's going to be proportionally reduced. And unfortunately, the fact that these guidelines aren't clear before people are applying feels extremely predatory in many ways if it weren't for the extremely low interest rate and the likelihood that it's all going to be forgiven. But to me, it ethically feels wrong that anybody should ever be signing up for a loan when they don't know exactly the terms that are going to be there for forgiveness. It just feels wrong. But at the same time, if the eligibility for forgiveness seems so cut and dry, I just can't imagine that they're going to pull the rug out from under everybody and say, psych, you have to repay the whole thing. If you're using it in good faith during the application process calls for good faith, you'd expect the forgiveness process to go in good faith as well. Hey, Greg, you got your hand up?
Yeah, quick question, and maybe this will help a couple people. So if you forget about how large your payroll is over the last 12 months, let's just pretend it's a number on, and that's a monthly number, and you apply for less than that, what you expect your payroll to be between, let's say, April 3rd and June 30th on a monthly basis, then that would, in theory, be able to be forgiven. You don't have to, you don't have to apply for more than you want, obviously. And as long as you don't lay people off between April 3rd and June 30th, and you're using it for payroll, and the amount that you got was relative to that, then it sounds like that would be forgiven. I know it's an unknown, but it sounds like that. Is that fair?
That's what it sounds like to us too, in that most folks are looking at this and just how can they make that number as big as possible for their loan, because it's going to mean the most potentially free money. And so I understand that urge and that instinct to do that. The same way when people go to the grocery store and right now it's like they see, that there's something in stock and they buy 10 of them. But at the same time, it's realistically, this is the idea of this is what can you use to help you stay afloat until we weather the worst of this crisis. And the government seems open to the idea of acting again. And my biggest hope with a lot of this is that if this pool's gone in a heartbeat, if it's gone tomorrow, like they just get 349 billion in loan applications tomorrow, that the government will see that there's obviously enough of a demand for this and then just expand the pool in future sides. And that discussion's happening with several Congress people on because a lot of banks.
Oh,
Oops.
Got muted again, Craig. You got still muted, can't hear you.
Craig just lost connection.
Oh yeah, he's there video wise, but
Okay, I can hear you all again.
There we go.
Sorry about that, gang. Don't know. Sometimes it just slows down. If internet wasn't an essential service before, I think we could all agree it is now. So much of this understanding is when banks are approaching Congress people and they're approaching legislators around guidance and help, is that they're basically the pushback that we're getting when we do these things is do what you can, and if you need more, we'll figure out ways to do more. And that seems to be the indication. We're operating off what we know right now, and sometimes I wish it were more. I'm happy to continue to answer questions, and again, and I'm sorry if it keeps being like that we just don't know, but take that from somebody who's, I've had thousands, like something I looked at earlier today, like 1,300 emails over the past 3.5 days. Like everybody has these questions, and it's so tough to tell people there's some things we know and there's some things we don't. But I could tell you from all the conversations we're having internally with legislatures, with industry groups, with other folks, is that everyone is in the same boat here trying to figure this out. And I hope that with this piece today, and we'll make sure you have this slide deck so you can keep things straight and how to look through things, that it's helpful enough for you to start digesting what's going to happen over the next 8 weeks with these programs, and that hopefully you can understand the difference between the two and which one, if not both, might help you the most to keep your business going during these times. Thanks,
Craig. We have a couple more questions if you have some time. Looks like Hal asked, do you have to show loss of income to qualify for PPP?
Not for PPP, not loss of income for PPP. PPP is based off of literally just paycheck and payroll expense. It's a good faith that you have to say that you were damaged by it, but in good faith, you could say if you lost one customer, you were damaged by it. And that's, there's definitely, and Sharon, I'm seeing your question here about how will banks prioritize underwriting with applications being submitted. It's a tremendous question and something we're thinking a lot about. The current expectation at Beneficial State is that we will open up a portal for folks to apply to, and we're going to go through and try to say, how do we have everything that we need? There's going to be a gate crash effect that some folks are going to think, I just want to be at the front of the line. And if you submit something that isn't complete with the guidance that we provide when we provide it, and understand we wish we had more time and indications of what that's going to look like, if you don't submit everything that you're supposed to have, we'll reply back being like, please submit a complete package and we can begin to process. That's kind of the understanding, is that we don't want people to just crash through with 75% of what they need and then like just so they could be first in line. But we're going through, the joke is that if GM could shut down and build ventilators, then banks can figure out how to make loans. Okay, so it's something that we're working the best we can to go for an all hands effort here to put folks from all business lines, all business sectors, to parts of helping get these loans approved and documented through the SBA, and not shoot first, ask questions later, but basically figure out how we can get the SBA guarantee for as many people who apply with us as possible, and then basically start documenting it after that approval's been given by the SBA. So kind of working assumption right now. I really wish it were more clear than that. We are centralizing the data at the bank in a way that's easy for us to access when people have expressed interest, and how we can keep people posted. And in that way, we're going to do there's our cat. He's coming by to say hi. We're going to do the very best we can to serve people equitably, and look at, we as a bank attract a lot of B Corps and nonprofits as customers. It's a disproportionately large portion of our customer base. And we're really looking that those are the folks who can afford to be affected the least in many ways. And we want to make sure we serve equitably. So we're doing all we can to put it together and put equitable practices in place so that we can start processing them. And realistically, we're imagining that it's going to be, we have 230 employees at the bank. And if we get, 600 loan applications, then it's something where we're going to have to figure out ways that we can have people handling applications at all levels, and then ensuring follow-up over the weeks to come, just as a backlog. And I'm imagining every bank is having conversations that are very similar to this, or saying we're not going to participate. So I wish I was more clear. I'm going to just keep saying that every time. Rose, are there other questions I might have missed in the chat?
There's another one in the chat from Corey, and I think Janet has a question after this. Is there a specific time period that needs to be used to determine average payroll? All of 2019,
Yep.
or January through February, or February through June 2019, yeah. And there's another follow-up question after that.
Yeah, hold on a second here. I'm going to grab something because I've referenced it a few times now.
I know the answer to that. I just read it.
Yeah, that's the guide to the.
Yeah, it's the average of 2019 unless you're a new company, and then you need to use the average of January and February.
Oh,
yep. So there you go. And I think I just sent that over here. Did I not? I'm hoping I did. On the chat to everyone. Here we go. Paste. Well, maybe it'll go. There you go. The U.S. Chamber Economic, that one right there, that link, if you look at that, it has a little spreadsheet basically for how to calculate your payroll costs and the time frame in which to do it. So that should be your guidepost. It's the best one we've seen so far, and it's illustrated pretty well.
Great. Let's see. Is it April 3rd to June 30th, or is it 8 weeks after approval and beginning of the loan? That one's from Corey, so I don't know if you need clarification.
So it's the 8 weeks from the date of the loan is the PPP, like what you need to be spending it on. The idea is with this, right, that 8 weeks is 2 months payroll. And then they're adding the 0.5 as another quarter of that to be used on things that aren't payroll, right? So that's where that 25% number came from, that more than 25% shouldn't be spent on non-payroll related expenses. So you use it over the next 8 weeks. That's what the PPP is supposed to be used within 8 weeks. And then recognizing that 8 weeks after April 3rd is not June 30th. You're still going to have another month after that. But they're also putting it out there, they're basically saying Q2, start of Q2 to start of Q3, basically is what this cycle will be related to COVID.
Thanks, Craig. Janet, did you have a question?
Yeah, so I got the application, the PPP application, and I just want to make sure we're ready to go when banks are ready to start taking applications.
You and me both.
What's that?
You and me both.
Yeah. So do you know what other documentation or materials are going to be needed for submitting for the?
Nope. And they're due tomorrow, or start tomorrow. The understanding is that you should have your payroll costs calculated somewhere that you can show and demonstrate. You should. Even if banks aren't requiring it right now, you're going to need it at some point. So calculate that. The other piece is if you work for a nonprofit, your nonprofit probably in their bylaws has a requirement for when you seek debt, who is authorized to seek it, and that the board has to authorize and resolve that you're allowed to take on debt, even if you expect that debt to be forgiven. So we're telling, if companies check your bylaws, check your operating agreements, make sure that there isn't a provision in there that you're not checking for that says what you need to do to encumber your company with debt, and that you handle that now before after you apply, or rather than after you apply and then a bank comes back being like, how do you know that you're actually able to take out debt, and that you figure that out now. If you're a sole proprietor, you're like a smaller company and it just says, yeah, in our bylaws, like our CEO can do this. And it's like, great, well then that's just make sure you have your bylaws and operating agreement handy for when you submit your application.
Great. Thanks, Craig. I know there's so much that's unknown here, and I know banks are still don't have the information they need to get started. So I think we'll be figuring things will be hopefully more information in the next few days. I'm gonna go ahead and wrap up the main presentation. We'll be making all of the recording and resources available online afterwards. Yeah, that's everything. Thanks.
Definitely. And most of you should have my contact info one way or another. I'm happy to try to be a resource for y'all as this goes on. It's just chill@beneficialstate.com, chill@beneficialstate.com. And you could shoot me an email. I'll do my best. I'm pretty responsive because most of the time what we've got is that all these resources and questions are being asked by a lot of folks. And so we have a lot of the same information that may be a sentence or two that's relatively personal, and the rest of it that's information that we've gathered that we can share to hopefully answer your question. Beneficial State does have a COVID-19 resources page on it as well. It's not as robust as some things you're going to find online, but I'm pretty proud of what it says and what it's doing. And we hope that if there's somewhere in there that we can be a resource for y'all, that you reach out and let us know how.
Great, thank you. Thanks, Craig, and thanks everybody for joining us. And stay tuned to the next digital event. It's great to see all your faces or your names. And we're gonna have a happy hour on Monday evening. So that's gonna be a good time. So join us.
Stay safe, gang. Take care of yourselves.
Bye,
Thanks, everyone. Bye.
Thank you.
Thank you.